Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to talk about Dr. Michael Burry and why he thinks the SPY is headed to 2,800 or only 50% of the way through its downfall. We're talking about how I got to that number and what he had to say about it.
All right. If you like this kind of entertaining stock market content, we're just trying to figure everything out on our own. Give us a like and subscribe, and we'll get started.
Two Stupid Guys Trade Stocks.
Stumbled through that one.
Yeah, it's all good. That's what we do here. So this is the tweet I'm kind of referring to here. He basically summarizes the first half of 2022, which we just closed out a couple days ago. And he's talking about how S&P, when you're adjusted for inflation, is down 25, 26%. Nasdaq down even worse. Bitcoin down 64, 65%. And then he talks about how that was multiple compression. And next up is earning compression. So I'm going to show you what those kind of numbers look like and what the previous recessions have looked like in terms of earnings compression and what that means.
So he's actually doing analysis on Bitcoin, huh?
Well, following it, I threw a Bitcoin slide in at the end, which was kind of, we'll see. But basically, stock price represents the current earnings of the company and then a market multiple based upon those earnings, right?
Right.
So, a really fast-growing company gets a bigger market multiple than a slower-growing company. Something like Molson Coors only gets like a 10 times multiple. So you take what they're expected to earn over the next 12 months, multiply times 10, and that equals the stock price. Something that's much more fast-growing, like Google, say, gets a 20 times multiple. So you take what they're expected to earn over the next 12 months, multiply times 20, and that represents the stock price. Those are the kind of two major components that represent the stock price, right?
Right. Higher potential for growth gets a higher multiple versus Molson Coors. It's not like everyone's just going to start drinking all their stuff. It's a slower process. So.
Yeah. And this right here represents the S&P 500 PE ratio, which is like the multiple ratio, basically, price to earnings. What you're looking at here is, historically relatively flat. Recent uptrend since like the 1980s as investing became a little bit more popular. That's why some people kind of argue that the historical average is 15, and really, it's been closer to 20 over the last couple of decades. The question which one you think really is the baseline. But either way, this kind of real downward slant here at the end of this graph, what you're seeing is this multiple compression over the last couple months since the beginning of this year, basically.
Perfect. Got it.
Yeah, coming back more into where it's been recently, historically, the last few decades, it's been hovering right around 20 or so, right? Since like 1980, we're basically looking at that's like closer to the average.
I'm actually kind of surprised that the financial crisis resulted in it being slightly below 20. I would have thought it would have been more than that.
Yeah. Speaking of financial crisis, right? That ties in very well to this slide right here. So a lot of people are calling for a recession right now, right? You're talking. There's a slide in here from Mark Zuckerberg. Elon Musk. You're talking about economists. A lot of people are out there saying this. We may be in it right now. We just closed the second quarter of 2022. We had negative GDP growth for the first quarter, and now that we have to wait and see whether or not the GDP was positive in terms of growth for the second quarter. So we may actually be in a recession. We don't know. What I looked at here was the kind of peak market earnings and then like the bottom of the market as far as the earnings go in order to determine how much the earnings declines. Like you said, we're through the first phase potentially with this market multiple compression. Now we're looking for the earnings to drop off, right? How much do the earnings typically drop during a recession? So these are like the three recessions we've experienced in the last several decades. And, you're looking at a peak in 89, 25 a share, down to 1991, where the bottom was 1930 a share, about a 24% decline. The early 2000s, the dot-com bubble boom, that burst 56, 76 a share, 2000, down to 38.85, 31% decline. And then we have the financial crisis. 2007 was where the peak was, 91 a share for earnings, down to 39.61 a share, 56% decline. Pretty significantly larger than the previous two declines. What did you say, Dylan?
I would, but it's also because of different circumstances. Fraud.
Mm-hmm.
And
yeah.
I think ours will be more than 31% and less than 56%.
Okay, I think that's reasonable. I think we're going to be somewhere in that ballpark as well. The 56%, you have to remember, I can't remember the exact percentage, but a large portion of this 91 per share was made by bank earnings, which we all know in hindsight were frankly total bullshit.
Yes, exactly. So the numbers that got them that high were inflated to begin with, let alone the fact that they found out all this fraud and then it dropped to compensate for it. The argument is we printed a gross amount of money, right? So this is also a unique circumstance. However, I don't think companies went up so much, and you'd expect that earnings to fall very far behind. But there's a lot of tech companies in particular where their earnings are still incredible, even with the growth. Yeah. Even with how much they jumped up. Apple's still making, when you look at their multiple, a gross amount. AMD, NVIDIA, so, you know.
Yeah, see our video about how Google performed during the 2007, 2008 financial crisis. They actually were gaining market share and continued to grow revenue throughout that time period. Facebook was also growing during the time period where it was pretty much flat. Well, we'll link that video.
I'll link it above right now.
Yeah, nice. The other thing to kind of point out, too, is you notice how long this was, 2007, 2009. So this was 10 quarters it took to find its bottom. The previous kind of recessions were only about 4 to 6 quarters. So this one was much longer in terms of its duration. That's why they call it the Great Recession, right? But, you know, basically, if we're looking at us being 50% of the way sold through, the S&P peaked around 4,800. This is SPY, so it's 48. It's 480 a share rather than 4,800, and we're down here about this 3,800 or so territory. So we're down about 1,000 points from peak. So if you extrapolate that out and saying we're only 50% of the way through, we're headed to 2,800 by Burry's prediction or so. That's hence where that number came from. It's a level we last saw in August of 2019. So we're basically erasing all of the COVID boom and bust cycle and going back to where we were before this whole thing started.
Okay. All right. Yeah. I'm going to pull up my chart at the end of this. I don't know if I agree with that.
All right, yeah, that's what I'd love to see. This is kind of like I was talking about. You know, this is Mark Zuckerberg recently. I own Meta. Actually, Dylan does as well now. But just the whole kind of point. Yeah, nice, me too. You know, you calling for this worst downturn we've ever seen in recent history, and you know, decreasing their overhead. You know, hiring fewer engineers, preparing for like a really tough financial environment, which is something I do like to see. I like to see the fact that they're being prudent before it's too late. You know, you don't want to be behind the 8 ball there. They're also, never forget that these guys are privy to some ridiculous like level of data that we don't get on the outside, right? You know, he can see how much money Facebook's making on an hourly or, you know, or daily basis. Like, so he knows what the ad market's doing. It's the pulse of it running through his office. So he's going to have advantages we don't. And the other thing I always like to highlight too is, you know, when you start talking about these market pullbacks, is don't forget to zoom out. You know, this is still a ridiculously parabolic shape that we've seen here, even with this recent decline. Yeah, it's got a long way to go before we're approaching you know, actual destitute levels of sell-off here. That this is still a great upward trend for the U.S. economy.
I will say that upward trend, it's also new investors and new money entering the market between like 2010 and up, because before buying and selling stocks was not very accessible to the average person.
I agree. It's become democratized. And a note on that zooming out whole trend, just don't do that with Bitcoin, though, because it also looks like it's an upward trend. That when it comes to Bitcoin, remember, ashes to ashes, dust to dust.
Oh, boy.
I know. Shot fully fired right there. Although, like I said, I'm still listening to this Freakonomics thing. They just brought the second episode of their whole cryptocurrency series, and it's definitely interesting. It's something worth diving into and thinking about from their perspective. They have one more episode to go. I'll probably try to do like a little summer video after that third episode is published.
Got it. All right.
But yeah, if you want to show us on the chart, where do you think the bottom is, whether this Burry 2,800 prediction is reasonable or not?
So this is zoomed out to actually about August 2019. It's funny that you said that. Yeah. So we have COVID here, boom, boom, boom. And then anyone who's watched our videos knows what these red levels are. I have had these on my chart since we were hanging out here as levels and floors and ceilings that we would drop to. And I'm going to zoom in to show you how accurate those were. But I had said we're going to hit 360 by October. Didn't think it was going to happen this fast because I already hit it. Okay. I was thinking about by October. I thought that was pretty close. I think we're not going below. I think we're going to hesitate around the 320 to 310 range. I don't think we're going to break 300. I think.
Okay, so 3,000 for the SPY.
Yeah. I think 320, that's why I put it in pink. I think we'll hit that, we'll go down, and then we're going to consolidate for like a year around that level. I don't think it's going to go crazy around it. And you can see why I got that. Peaks, valleys, a lot of stuff before COVID. If you zoom in here.
Lots of contact points, yeah.
Lots of contact points. So I had these up. Obviously, this 3D5 level was quite accurate. The only way to break through it was to gap down, which is fairly common. And this 358 level is kind of right where it almost bounced to, went back up to 385, went our way back down. So
yeah, still a pretty consistent downward and sloping trend there.
Absolutely, it is. Yeah, but yeah, I think 320 is more likely. I'm still buying just like a little bit, like responsible. Like I bought like 10 shares of NVIDIA and like 5 shares of Meta. Just like little amounts because we never know when the bottom is.
Exactly.
It's a complete guess. Trying to time it perfectly is how you miss out on lowering your cost average.
Yep. I totally agree. That's what I think too, is you kind of nibble at it on the way down.
Yeah. I got like 20 grand I want to throw in, so I'm just like slowly adding it in.
Nice. Yeah. All right. I love it. All right, guys. Well, let us know. What do you think about this prediction? Whether or not Michael Burry's right or is Dylan right? 3,000, 2,800?
It's probably Burry. All right, guys. Have a good one.
Catch you next one.